The simmering feud between President Trump and Federal Reserve Chairman Jerome Powell erupted into a full-blown public spat early Thursday, with the president unleashing a scathing attack on Powell's monetary policy and demanding his immediate dismissal. Trump, in a post on his Truth Social platform, didn't mince words, labeling Powell as always too late and wrong, a consistent refrain in his escalating criticism of the Fed chair. The president's outburst followed Powell's warning on Wednesday that Trump's sweeping tariffs, a cornerstone of his America First economic agenda, posed a significant threat to the U.S. economy. Powell cautioned that the tariffs could trigger a surge in inflation, complicating the Fed's already delicate balancing act of managing economic growth and price stability. This stark assessment directly contradicted Trump's repeated assertions that the tariffs were generating substantial revenue for the U.S. and bolstering its economic standing. Trump's frustration is further fueled by the perceived disparity between the Federal Reserve's actions and those of the European Central Bank, ECB. He pointed out the ECB's intention to lower interest rates for the 7th time this year, a move he conspicuously failed to contextualize within the broader economic instability caused by his own tariff policies. This omission highlights a pattern of Trump's rhetoric, a selective presentation of facts designed to bolster his narrative while ignoring inconvenient realities. The president's attack on Powell is not an isolated incident. He has repeatedly pressured the Fed chair to cut interest rates, despite the Fed's independence from the executive branch and the established norm of avoiding overt political interference in monetary policy. This blatant attempt to influence the Fed's decision-making underscores the unprecedented level of friction between the White House and a traditionally autonomous institution. Trump's impulsive imposition and subsequent partial rollback of tariffs have sent shockwaves through global markets. The initial imposition, announced on what he termed Liberation Day, triggered a dramatic sell-off in U.S. government bonds, traditionally considered among the safest assets worldwide. Wall Street reacted with alarm, with experts forecasting a heightened risk of recession. After days of steadfastly defending his trade strategy, Trump offered a temporary reprieve to countries that hadn't retaliated against his tariffs, a move interpreted by many as a belated acknowledgement of the severe market backlash. However, notably, the reprieve conspicuously excluded China, the primary target of his trade war. Powell's concerns about inflation are not mere speculation. The World Trade Organization has issued a dire warning, predicting that Trump's tariffs will significantly depress global economic growth and reverse the course of international trade. This sobering assessment casts a long shadow over the president's optimistic claims of economic prosperity fueled by tariffs. Trump's Truth Social post concluded with an unequivocal demand for Powell's dismissal. He declared, "Powell's termination cannot come fast enough," reiterating his accusations of Powell being too late and always too late and wrong. He bolstered his claims by pointing to a decline in oil and grocery prices, an argument that ignores the complex interplay of global economic factors and the potential for these price reductions to be temporary or even indicative of broader economic weakness. The escalating conflict between Trump and Powell is far more than a simple disagreement over monetary policy. It exposes the deep fissures within the U.S. economic and political landscape, the potentially devastating consequences of unilateral trade actions, and the unprecedented level of political pressure being exerted on an institution crucial for maintaining economic stability. The implications of this ongoing battle extend far beyond the immediate consequences for interest rates. They speak to the very integrity and independence of key governmental institutions and the long-term health of the U.S. and global economies. The president's actions, fueled by his characteristic disregard for established norms and his penchant for impulsive decision-making, threaten to destabilize the delicate balance of the U.S. economy and further exacerbate existing global economic uncertainties. The situation calls for a measured response, a commitment to evidence-based policymaking, and a renewed emphasis on the principles of institutional independence, principles that appear increasingly threatened under the current administration.